Ladies and gentlemen, Mr. Ashar Nazim, the Group CEO of Aion Digital. The presentation is about the journey towards open banking, what banks need to do to enhance value to customer. I welcome you, Mr. Ashar. The floor is yours.
Thank you so much, Yusuf. I believe you can see my screen now.
It's full screen.
Okay. Is that better?
Yes, this is full screen now. Thank you. Please continue.
Great. Thank you so much for having me here. I'm Ashar Nazim from Team Aion. We are in the business of building digital banks focused on GCC via Rubik's platform in UAE, in Kuwait, in Bahrain, and in Saudi. Spire is a premier open banking platform that we are rolling out in GCC, and our primary focus markets are Bahrain and Saudi to start with. And I've been, again, we are engaged with a number of leading Islamic banks as our clients, as well as some national level entities. And the ask today is really to share our learnings in terms of what banks need to do to build a successful open banking business in GCC. Of course, we are seeing some very successful examples in UK and Brazil and Australia. But again, we've also seen that lift and shift model does not necessarily work. So let me take a more practical view of what we are seeing on the ground. Starting with, of course, open banking initially has seen a lot of resistance from a big segment of the financial sector. There are a number of resulting challenges for banks. They've taken many of them took a minimalist approach initially, looking at the regulatory cost of opening up the data tap, of course being apprehensive about the most profitable parts of their business being cherry picked by new entrants, and also trying to make sense out of, okay, so what needs to be done for them to actually put together the data from other other sources, external sources, and how do we put it to use. So a good part of the last several months journey in the region has been more about saying, okay, this is a regulator induced innovation, but what's in it for me, right? And slowly we are seeing that change of mindset coming in, and there are roughly, I would say, about 20 to 30% of banks out there who are now taking a more proactive approach in terms of investing and understanding what open banking means for them. And again, saying it's not just for the sake of innovation that we are doing, but how do we actually build better business, bigger business, more profitable business. So the first and foremost priority is for banks is not start with technology, but actually understand what the business propositions are that are relevant to the GCC market. And GCC market has different dynamics than let's say Europe, right, or South America or Australia. So again, it has to be contextualized. There is a lot of debate that we see happening on the delivery business model, and what that means is, okay, so I'm used to doing it all by myself, and therefore in the open banking space, what is it that I can do myself, build in-house, versus where do I need to collaborate, whereas and what do I need to partner up with. And when I do partnering, is it a vendor relationship, right? Is it a long-term relationship? And there's no easy answer. And this is the boardroom discussion that is happening. It has implications on the governance and the risk and the regulatory aspects of the banking business. And banks are typically not necessarily known for being great ecosystem managers, right? So this is something new for them. And then comes the execution part. And we are saying that, again, the challenge for many of these banks is, how do I become a part of that ecosystem play and provide a consistent shared experience for my customers end to end, right? I mean, across the value chain. So when you look at the business propositions, again, taking all the buzz out and talking from a very practical perspective, just being an aggregator or having a directory in place is really the infrastructure, is the starting point. But then what do you do with it, right? And what are the quick wins? And how do you drive customer adoption? And each bank will have a slightly different take on this one here. But what is very clear is that the basis of competition in the banking industry is set to change, and is set to change beyond recognition. And that's a big statement, right? I mean, that the industry is acknowledging. And some of the use cases that we see more popular in the region here is, for example, the KYC 3.0 that we're talking about. And that is about, fetching and populating multiple data in real time via APIs and without any manual entry. So we've been in conversation with a number of banks, and they've got a very nice facade, and a nice front end. But really behind that, they're still using very old technologies, number one. Number two, which is not fully integrated. Number three is a lot of manual processes are still there. So forget about, again, and what they're saying is every time I grow, actually the incremental cost to serve actually grows a lot faster. So now with this open banking play, the conversations that are happening in boardrooms are, okay, how can we help bring down the cost of customer acquisition? How can we help improve operational efficiency there? How can we improve the customer experience? Then we're talking about the quality of engagement between banks and customers, right? I mean, you've got, again, it depends on the lens that you're wearing. You can talk about this is just a transaction categorization, or this is just a very simple vanilla solution that you're offering, or you can look at it as saying that, I will engage with my customer in a language that they understand and they like. And, again, it will be a very visually delightful, neatly categorized, intuitive way of sharing financial information for customers with the ultimate objective of helping them make their next best decision in their financial lives, right? Now, if the final part, which is helping them make that banking decision fails, then again, the purpose fails here, right? So this is not just for the sake of doing it. It is more for, again, looking at the customer lifetime value and does that impact, right, the bank's profitability. The third one, of course, is real-time credit scoring, a 360 view using real-time data from multiple sources, which are continuously updated via APIs, will impact the credit decisions that banks are going to make in future, right? And the conversations we were having with, for example, in the mortgage segment was, every time actually I sign up a customer, I have to then, once they've onboarded, I've got to actually make manual calls to different banks and credit bureaus and to customers to get all that data, which is manually populated. And that is how I move forward. Forget about real-time, multiple sources, continuously updated data, right? So the quality of the credit decisions going forward will change comprehensively. And what that means is banks are looking at bringing down their cost of risk and the intermediation, the cost of compliance, and saying, how can I reduce my bad debt portfolio? Yeah. And also this is about financial inclusion, which means, creating thin files and reaching out to segments which were previously not necessarily a nice fit to the bank's credit assessment. Yeah. We also see a few more use cases. Again, lifestyle banking is again a buzzword, but here what we're talking about is, okay, smart spending, smart saving, budgeting tools, you put that in place. Can you actually add, very neat, small little pieces of AI algorithms based on AI to actually assess, again, the behavioral patterns, and therefore help for banks, and therefore help improve the quality of the portfolio, improve customer retention, improve, the fraud rating, and then so forth. And an example I will give you is with one of the bank, we looked at their entire credit card portfolio, and the bank, let's say for argument's sake, has 250,000 customers. And right now the bank wanted to know that, which customers are we at the risk of losing in the next 6 months. So based on the last 10 years of behavioral data, we were able to apply those algos and, very specifically pinpoint a very small subsegment of customers that we said, based on all these prior trends, we believe that in the next 6 months, these are the 10,000 customers that you are at the risk of losing. And therefore, what the banks could do is they could again prioritize their resources to those 10,000 customers instead of the entire 250,000, right? So again, you can see that, the huge impact on retaining customers, improving profitability, and also keeping the cost down. Yeah, and at the same time, personalized solutions, again, a buzzword, but let's bring it to life, right? I mean, so what we are seeing is, for example, on lending decisions, right? I mean, so for example, mortgages or financing that the banks have given out, what they're saying is, as my portfolio grows, I'm having a nightmarish time because my cost to serve has increased and I've got a much bigger workforce right now just trying to serve this customer portfolio. Why? Because I'll get a phone call that okay, well, I need to change my payment terms, or want to make an extra payment, or want to change the terms, right, of payments, or people who have defaulted and then are willing to pay back. There's a lot of manual intervention that is happening. And what we are saying is, okay, you know what, these product features can be hyper personalized, even the pricing and the payment plan, again, based on the prior performance of the customer, not with just your institution, but also with the industry at large. You can form a view in terms of what their next best next best product would be, what is their requirement. And therefore a big shift that is happening is helping banks move their engagement, right, from the point of sale to actually what we call point of intent, right? Being able to understand the customers better, being able to read that data, and therefore being able to personalize as these solutions, which are then delivered in a very highly automated, digitized way, right, to these banks. And then, of course, the account-to-account access, where we are saying, okay, you know what, right now you're going through, let's say, Visa or MasterCard, whatever, and you've got X million dollar in transaction volume. And what if you can have a direct pay by bank feature, which bypasses, the cards, the Visa, MasterCard, and directly say, for example, in one instant, adds 2.7% to your bottom line. So take a step back. What we are trying to say here is there is enough of conceptual conversations on how open banking is good and what the regulations are, etc. That is happening is how do I bring the business, the regulation, the technology, the design part together. And therefore, what we are seeing is there's not been a lot of success from providers who do not bring this confluence of skill mix, right? So you need this group of this group of team that brings banking, regulations, technology, and design experience to actually say, okay, the why part, what's in it for the bank? How do I help? How do you help the banks improve their bottom line, increase their top line, become more scalable? So that is, again, there's a lot of conversations around the business propositions and the priorities differ by banks. The second most important part is, again, talking about the delivery model, right? And this is primarily around IP. It is also about overestimating oneself, right, and underestimating the complexity involved, and therefore making a decision that what should I build in house versus what kind of a vendor relationships should I have, what matters, and with what kind of providers do I want a long-term collaboration model. And again, this is easier said than done, right? This is again an everyday conversation in the CEO's office. Talking about how do you protect the IP in the long term. And there we are talking about, some very specific points. For example, the conversation that are happening is, okay, so who owns the customer relationship, right? Do I own it? Does my partner owns it? Who exactly owns it? And then differentiating it by saying, okay, so who owns customer relationship versus who owns the data of the customer, versus who owns the right to use that data, of course, in a consented manner, right? So a lot of very interesting conversations. And the third-party services, call it premium services, what we are seeing is a more hybrid approach where banks are taking both some build and some buy decision. They are talking to actually both within the banking sector, more competing, but also collaborating, as well as talking to new entrants, of course, with a pinch of salt, maybe with a lot of salt, and saying, okay, you know what, within the banking sector, when I'm collaborating, what are the decisions I need in terms of who's my strategic partner going to be, and who owns that relationship? What do I build in-house? And what do I have a branded alliance with? And then again, other options are, okay, in terms of platform business, again, with the banking sector and with the PPPs, what kind of strategic partnerships can I forge either on a jointly branded basis or on a white label basis, right? So that awareness, that ego part is still an issue at the moment, I would say, right? It's again, understanding that it has to be a partner ecosystem and not a vendor ecosystem that you have is what we need to accept. And finally, talking about the shared experience via ecosystem play. And you've seen, again, that the user adoption in UK is about 3%. And what can we learn? How can we be a fast follower, fast learner? And what can we do differently to to embed open banking within the experience that we offer to the and without being very crude or explicit, right? And that is more on the execution side. And what we are seeing there is a very important, and this is from a ground up perspective now, right? I mean, so from a tactical perspective, you're talking about API management, right? I mean, so how you define, track, and evaluate response time and flexibility. For example, right now, the conversation we are having with banks is in UK, the API response time has come down from 2.5 seconds to 0.5 seconds, right? Or at least that is what the OBI is trying to achieve, right? And the conversation we are having with the bank's leadership team is, okay, so how is your system today structured and how long will it take for you to actually achieve this? Similarly, right tooling in the sense that, how can you bring agile change management within your organization? Now here you've got some unique challenges, right? I mean, you've got to live with the legacy infrastructure that you have. We earlier heard about the public cloud and the private cloud strategies that different banks are contemplating. We are talking about issues around rapid deployment and, if need be, rollbacks. Right? We are talking about, okay, how do we make it scalable? And what scalable means across core banking, card management system, middleware layer, authentication layer, and so forth. Right? How do we make it scalable? Just to give an idea, in UK in 2018, as we know, the volume of API calls were about 66 million, and in 2020 it was 6 billion, right? Wow. So is the bank's foundations, right? I mean, geared up for this kind of a scaling up. And of course, customer experience SLAs, downtime, error time. Again, the customer demands the service right in the first place, right away, and so forth. And again, there's a lot of specification that we're talking. And banks are realizing that this is quite complex, and operational SLAs as well, right? And really, what the surprise element is, for example, in UK we saw the directory play, but then again we also saw aggregators making their place in the region. And that's a very interesting conversation that we are having with the regulators and with national level entities that, okay, so directory play is there that gives access to TPPs to actually get started, but still, given the technical complexities involved, what have the aggregators done to actually make their place in this entire ecosystem? And of course, then, again, more innovation is going to come from outside of the bank. So the conversations are, okay, so how do we open up the API, how we offer API developer services to enable innovation on the go? So I think with Saudi joining the party and with Bahrain leading, we see some very interesting play emerging. And for the first time, beyond grabbing headlines, banks are taking a more realistic view and saying, okay, let's bring the banking perspective, regulatory perspective, technology and design perspective together to see that, what's in it for us. Let me stop there. I hope this was useful.
Thank you so much for that wonderful presentation, Mr. Ashar. I really like the point where you mentioned basis of competition is set to change with the open banking and the pointers which you gave us. Of course, Bahrain is leading the open banking space. I was looking, we don't have any questions on the platform.